Traditional gaming firms Take-Two Interactive and Ubisoft also invested in the round, which was co-led by Morgan Creek Digital and Brevan Howard Digital. Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. October 4, 2022. CoinDesk tweeted. At 0x Horizon, the developer of NFT trading card game at Skyweaver Game, has reportedly raised $40 million in a Series A round. By Jamie Crawley CD. The developer of the NFT trading card game Skyweaver Horizon announced on Tuesday that a Series A financing round totaling $40 million had been completed. The blockchain-based gaming business intends to utilize the funds to expand the development of its Skyweaver game, NiftySwap marketplace, and platform of Sequence developer. In the online game Skyweaver, players compete against one another using fantasy-themed trade cards in the manner of NFTs, that are blockchain-based digital assets which reflect ownership of either virtual or physical properties. By the end of June, the site had more than 400,000 accounts. Ubisoft or UBI and Take-Two Interactive or TTWO, two well-known names in the game industry, also invested in the round, which was overseen by Morgan Creek Digital and Brevan Howard Digital. CMT Digital, Polygon, Exchange, Bitcraft Ventures, Round 13 Capital, QuantStamp, and EveryRealm were the other participants, also private investors such as Tobias Lutke, the CEO of Shopify, Sebastian Borget, the co-founder of Sandbox, and Alexander Larson, the co-founder of Axie Infinity. The fundraising round was initially reported on by Bloomberg. The company's valuation was not made public, but Deborah Marfort, chief financial officer, said it was more than the $89.5 million it received in its previous investment round last year, according to a Bloomberg article that used PitchBook data. October 6, 2022. A tweet from Cointelegraph indicated, as cryptocurrency becomes more mainstream, financial institutions and investors will demand more protection and less anonymity on the blockchain. Reversible transactions could play a key role in making them happy. Discussions of preventing fraud and crime have been complicated by a proposal from Stanford University to have cryptocurrency transactions reversible. Researchers hypothesized that blockchain mutability, or the capacity to undo transactions, might aid in crime prevention. One benefit of cryptocurrencies is that the market, which consists of users, traders, and financial institutions, may determine whether or not reversibility is desired. A new cryptocurrency that allows for reversible transactions would allow for testing of both the desire for and acceptance of reversible transactions as well as the theory that reversibility decreases crime. Despite popular misconceptions, Bitcoin is not a product of the dark web. As more money is invested and more coins are moved, scams, frauds, and other types of crime do occur and are on the growth. Blockchain forensics is one of the primary methods used by law enforcement to counter crime in cryptocurrency marketplaces. In the expanding subject of blockchain forensics, transactions are examined in order to track down and reclaim cryptocurrency assets that have been lost or gained illegally. Several years ago, it originally sprang to attention when the United States Internal Revenue Service utilized it to successfully retrieve the ransom Colonial Pipeline gave to the hackers who had seized control of it. Blockchain forensics is growing in importance as a compliance and regulation tool, which might have an influence on lawful traders in the extremely decentralized and risky crypto world and non-fungible tokens. To seek for indications that people are attempting to disguise or conceal their tokens, investigators carefully examine the transactions that are published on blockchains. A few of them involve quickly switching among ledgers, utilizing tools that disguise or counterfeit IP addresses, doing several minor transactions, and employing a mixer service or tumbler, which blends cryptocurrency from various sources to hide its origin. The potential incentives from crime would be diminished by reversibility, which would make it much simpler for law enforcement to retrieve stolen and illegally obtained cash. By providing crypto services to the wider public rather than treating them as specialized investments, banks and other well-established financial institutions may be able to lower their risk. Additionally, it would lessen any issues brought on by human error, like fat finger mistakes. As a result, cryptocurrency would be considerably more beneficial for ordinary purposes like investment and trading. Reversibility or mutability, however, would go against the fundamental element of the blockchain. Mutability might weaken one of the blockchain's primary security characteristics by making it just as prone to exploitation as any other information repository. Another essential factor, decentralization, would appear to be breached if a standard were to be imposed on when the blockchain might be modified. Tension between authorities and cryptocurrencies is fairly unavoidable given their decentralized, anonymous character. Due to ideological or privacy concerns, the blockchain's guarantee of anonymity has drawn a lot of attention. However, such characteristics draw more attention from authorities since the same anonymity may perform transactions such as those wherein taxes aren't gathered, the sale of illegal substances or weapons, or the evasion of international sanctions by nations like North Korea. Investors in financial institutions will pressure exchanges and authorities to develop security or lessen anonymity in order to adhere to anti-money laundering and security rules as cryptocurrencies are becoming more widely used. Blockchain forensics would become much more essential for regulators and investors if it were mutable. As an example, many governmental organizations and financial institutions demand that individuals and businesses keep precise financial records. These records must be manipulated in order to carry out many fraudulent practices. For instance, embezzlers need to hide their tracks, stock waterers attempt to persuade individuals that a business is performing better than it really is to boost the share price, and so on. To produce accurate financial statements when they are found, forensic accountants are recruited. As the de facto central authority, blockchain forensics companies would be responsible for preserving the blockchain's integrity, which would inevitably raise the question, can we trust them? However, it should be the decentralized authority of the market itself that makes the final decision whether to make the blockchain mutable or reversible. The most unique feature of cryptocurrencies is the number of different currencies may exist simultaneously and compete with one another. A stable currency supported by precious metals with high purity and controlled by a central bank emerged from hundreds of unsteady ones in early modern Europe. Nathan Lewis, as economist, memorably phrased this astonishing feat of men in tights was pushed not by power-hungry rulers but rather by merchants in cities like London and Amsterdam who needed stability, while ordinary folk profited because they could trust that their money would remain valuable. Similar developments could be taking place until decentralized finance discovers a replacement that enhances security and stability without compromising its guiding principles. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.